So I want to talk about this upcoming week, kind of what to expect for SoFi stock for the broad markets. We're going to talk about the macro here and really what the markets need to continue to rally. Now, I will say first things first off the start of this video, like I said in the previous video, if we sold off into the close on Friday, that would have not been a good thing. And it looked like we were going to for a minute. A lot of people were starting to get very, very nervous. We were going to see one of those end of the day sell-offs yet again on Friday, but it was actually the opposite. We then proceeded to rally and still closed with a 2.39% gain. Heading into a weekend is quite phenomenal. So I do think a lot of the sell-off has already happened. A lot of people fail to realize, some people have very extreme downside price targets, but a lot of people don't even realize that the Nasdaq was down 30% on Thursday intraday. So we've already seen a lot of pain in these stocks. Now, let's talk about kind of what is going to happen, what I expect to happen, and we'll get into that. All the data around SoFi stock you need to know, but I do want to read you part of this article and kind of put SoFi into words on how I look at this stock for the long term, because you can have short-term price swings, cool, fine. SoFi stock was up almost 20% on Friday. It's reversed 27% since the bottom here at $4.82 per share, currently sitting at $6.73 per share. So that's fine. That's great. We'll take that in the short term. But what does this stock offer in the long term? This is a stock, in my opinion, that's 1,000% gainer, if not more, over the next 5 to 10 years, and I think the earnings proved it. I think simply looking at the fundamentals here, looking at the growth trajectory, the total addressable market, and where SoFi stock is going, or SoFi as a business, it's very, very hard to have a long-term bullish case on SoFi stock. But this article says, for long-term growth, ignore the volatility and look to SoFi stock. Earnings aside, SoFi stock has a lot going for it. And this article came out 2 days ago. So it not really since the whole rally has kind of started, but they did revise it. As you can see, they do acknowledge the rally on Friday that we did see. But it says, basically talking about the earnings report, and it was a rough week for SoFi stock because, they were halted, earnings came out, basically leaked. I don't know if whatever word you want to call it there, you can call it whatever you want. But it was not good timing. Let's just call it that. Not good timing at all, and it definitely hurt the stock and didn't help the stock. We'll just call it that. But he goes on to say, now I've been bullish on SoFi in the past and continue to remain bullish on this stock over the long term. There's a lot to like about the potential for fintech to disrupt traditional banking sectors globally, and with so much of the world's population still in the underbanked category, I think SoFi stock is one with an intriguing growth trajectory. However, that's over the long term. Over the near term, any series of headwinds can shake investor confidence. This week's earnings report appears to be just the latest such catalyst. That said, let's dive into why SoFi stock is rebounding so hard on Friday, up 15% so far. SoFi stock provides high upside long-term growth. As mentioned, SoFi's recent earnings report was not received well by the market. That's not necessarily because of the numbers. Its loss was in line with estimates, while revenue was well ahead of estimates. Rather, the issue was the company's forecast for Q2 growth, which came in below the analyst consensus. I tend to take a positive view on the consensus outlook. On the one hand, one could certainly make the case that there are plenty of organic growth levers SoFi can pull to generate growth. On the other, it's a tough macro environment out there. With rates rising, it's unclear how many customers will want to refinance debt at these levels. And he goes on to say, additionally, given President Joe Biden's view on kicking the student loan can down the road, SoFi student loan lending business may hurt from here. Now, that's the main key that I want to point out. A lot of people don't fully realize this. And I think they do, but a lot of people don't look at SoFi in the right light. SoFi has been putting up insane revenue numbers, considering their largest segment of their business is gone. There's essentially like no business at their number one sector, which is student loan refinancing. Now, I think it's pretty safe to say that people are comfortable not paying back their student loans right now, right? People like that. but eventually they will have to. You cannot get rid of student loans, and this is kind of one of the bearish theses for SoFi, that the government's just going to cancel all student loans. Well, fun fact, sorry if you know this offends anyone or you're looking forward to this, if you have to pay back student loans at one point, there's a reason why student loan debt is not bankruptable, and the government cannot slash all your student loan debt away. It's because it's the government's largest asset. So they can go, you know, a year or two without making people actually pay back their student loans, but inevitably they have to. That would be like quitting your job and, you know, only working on a side hustle or something. You would lose a lot of money, and that wouldn't be probably unsustainable, right? Same thing for student loan debt. The government cannot cancel it. So if SoFi stock can put up these kind of numbers with their largest segment of their business just temporarily halted, I think once that student loan business actually does come back, I think it's going to come back with a fury. I think it's going to be insane how many people that are looking to refinance student loan debt. And the way that essentially SoFi and its process works, it's very advantageous for a lot of people to use SoFi. I mean, after all, if you look up student loan refinancing, SoFi is going to be one of the main things that comes up. Student loan refinance. SoFi.com. That's the first thing that comes up. That's what people are going to do. And SoFi gives very attractive rates, 3.49%. Why is that? Because they have their banking charter license. So now they can essentially do what the banks do, and they can just undercut a lot of the competition and drive more business to SoFi. And the way it actually works, it's so automated and so easy to do. I think a lot of people prefer this over other things, and I think it's going to absolutely boom in 2023, and that's when you could see some shorter term, you know, 1 year I still think is pretty short term in the grand scope of things. I'm like a 5 to 10 year, maybe even 20 year SoFi investor over here. But still, here in the next year or two, you're going to see that really start to drive the fundamental case for SoFi. And it would not surprise me if you do see people trying to buy out the stock, even though I don't want that to happen, because I think this is easily a 50, 70, 80, 90, $100 billion company in the future. It's still something that is out there. So I think that really goes underappreciated, and I think a lot of people get scared of the fact that maybe the government's going to get rid of student loan debt. I just want everyone to know that they cannot do that. Like, financially, the government cannot do that. It is the government's largest asset, and they would be taking a big hit long term if they actually did do that. So I wanted to clear up that concern. Nonetheless, now let's get into exactly what is going to be happening this week. And the biggest thing to know and to pay attention to is the 10-year treasury rates. We've seen these rates go up in a very historical way. We have went up higher in treasury rates at a more aggressive pace than we fell to the downside during a 100-year pandemic. So this has been very, very historical, and we need to see the 10-year rates actually start to take a breather. And when they do take that breather and they do start to come down, like you seen on Friday, the rates were down about 0.1%. You can see these big rallies in the markets, especially with a lot of companies that essentially need to finance debt or raise capital to keep growing in the mid to long term. Something like SoFi Stock, DraftKings, Fubo, AMC, these kind of stocks, they're going to rally back much harder than the overall markets when you do get the treasury rates actually coming down and when some good fundamental news for the economy actually does come out. Now, one thing that I will say you guys really want to watch for over the night tonight to kind of get a glimpse of what is going to happen for the day tomorrow is going to be the price of crypto. The price of crypto over the last 24 hours has been pretty good. I mean, Bitcoin up almost 1%, Ethereum up 2.28%. You got BNB up 3.5%, Cardano up 6.3%, Solana up 10.53%, so on and so forth. Some cryptos gaining a lot more than others. But long story short, if there is some kind of liquidity issue in crypto, that could mean more potential downside for the markets. Crypto and the markets tend to kind of correlate. You know, you really didn't see the crypto market selling off too big until just recently. A lot of that was actually in the stock market. Crypto was kind of insulated, but now if you do see crypto take a hit, it probably will affect the market. So that's really something I want to pay attention to. What happened with Terra Luna looks like a rug pull, and there's obviously, you know, that's going to create some fear, uncertainty, and doubt in the crypto markets. If you start to see more liquidations or potentially more rug pull like scenarios, it's gonna freak out crypto investors, and it's not going to be a good thing overall. So I'm paying very close attention to that. I will let you guys know if anything, you know, comes up that is something you need to know that will affect your investments. I do want to say as well, before we get into SoFi specific data, that the fear and greed index is still extremely fearful at a 12. Even last week, the fear and greed index was at a 16. So given even the bounce we've seen on Friday, you're still in extreme fear levels for almost all indicators besides the VIX. Now, I think I said this in another video, but I want to say it again because I know I've heard a lot of people saying, well, the VIX did not hit a new all-time high and the market's bottomed. That can't be the case. But if you understand the VIX is the volatility index. It's basically what it does is it tracks the S&P 500 puts and calls. So when there's more puts going on to the option chain, the VIX tends to spike. And when there's more puts going on to the option chain on any given day, the markets tend to be down, right? So the VIX has been acting very weird, not really breaking out from these levels, hit a high of about 35, but even back here before the last Fed meeting, it was March 7th, the VIX was at 36.25. So the VIX has not hit a new high and the markets are bouncing. I think it's simply due to the fact that a lot of people are holding cash right now. So really, you know, options, they are insurance. That is something that you buy to protect potential losses, just like car insurance, just like home insurance, just like other forms of insurance. If you are in a lot of equities, then it makes sense to buy options. But a lot of people have a lot of cash right now, so it doesn't necessarily make sense to buy protection on assets that are in cash, right? You're not going to lose cash. It's actually very deflationary what's happening in the stock market. If you're worried about inflation, you're worried about them gas prices going up or taking your girl out to dinner costing a little bit more at the grocery store, so on and so forth, you want to put some money in the stock market because now you can get 2 to 5 times more shares that you could just a couple of months ago. So I think there's a case for bearish, bullish sentiment here, and I don't really think there's anything that's going to change that this week. We do have retail sales that come out Tuesday at 7:30 in the morning, and then you have real estate data, but that's pretty much it. We'll see if we get some kind of surprise statement from a Fed member. That could be very, very important. Obviously, the Fed's going to dictate really how the markets move from this point on until we see inflation come down and analysts finally get it right, or we see the Fed U-turn, which will involve CPI coming down. Then I don't really think you're going to get enough of a rally to really, you know, see all-time highs in the markets. You could rally up another 5 to 10% from here, but I think ultimately we will probably hit new lows in the markets at one point into the future if earnings are worse than the markets expect. You've seen a lot of analysts that refuse to downgrade their earnings estimates, and if that's turns out to be a good thing, if companies can actually pull through with those earnings estimates, it's going to be very, very good. If they can't, it's going to be not so good. So that is that. Now let's talk about SoFi specific data. Let's take a look at good old Ortex. We love Ortex over here. See if there's any more insider buying, and it does not look like it, but there has been $2.36 million worth of insider buys over the last about 3 months here. So you've seen a lot of buy the dip action from Anthony Noto and a couple of the board directors. So that's still really good, and that's a pretty good sign. There's a lot of reasons why people sell stock, but there's only one reason why people buy stock, and that's because they think the stock is undervalued and it's going to go higher. Now, as far as the short interest of free float, that is sitting at 21.27%. Current shares that are sold short, 154.85 million. Cost to borrow max is at about 20%. So it is not cheap to borrow SoFi stock to sell that stock short. So I do think that could provide potentially less downside pressure because the cost of borrow rates are just so high to short it. It doesn't really make too much sense right now, at least here in the short term, to go out and short SoFi stock until we get another bad catalyst. That could be the next, round of shorting we could see, but still 21.27% is very, very high. We have a 100% share utilization over the past couple of weeks. That has been pretty much the same. Days to cover is sitting at 4.18, so prime for a short squeeze, but that's not really what we are looking forward to here on this channel. This is really something that could make your future very, very bright, especially if you are buying now when everybody tells you not to buy. And it's so comical out there. People want to tell you to wait for the trend to reverse, but a lot of people fail to realize that even if you miss and you're not invested in the markets on the best 5 days of the year, your returns are dramatically lower. Like, you could have a negative return on the year if you just miss the 5 best days of the year. So SoFi stock's one of those where I'm not really doing too much with it right now. I do continue to buy slowly. I think I have about 700 shares ish now, and I really want to build this position out to say 5 to 10,000 shares over time. And that's the beautiful thing about right now is you're in this environment where you're probably not going to see a V-shaped recovery like we've seen in 2018 or 2020. Why? Because the Fed came in and said that they would support the markets, and that's why the markets bounced back up. So it's not really like a rush. You don't have to like run out today and like go crazy trying to get a bunch of loans to buy SoFi stock on the dip. It wasn't like this ain't like 2020. So you're gonna have plenty of time to load up and buy as many shares as you want before potentially the stock does make a big move. Now, the option activity, you did see 13 orders totaling $2.48 million, 57% positive order value on Friday. And even though short interest is 21%, the put options do contribute to a lot of market maker shorting, and that does not get reflected in the actual short interest. So I do think the number of shares that are sold short is actually much higher than what Ortex is actually giving us. As you guys can see, a lot of these short-term, close to the money put options, market makers have to go out and short a lot of stocks. It kind of works like a gamma squeeze, but in reverse, call it a reverse gamma squeeze. So that could help to fuel potentially a very bullish week. So that is that. Let's take a look at the max pain for SoFi stock, and it should be about $8-9 per share. And yeah, that's pretty much what it's coming down to. Hold on, let's see. Let's type in SoFi. Doesn't look like it wants to work, but I had just looked at it today, and it's about $8-9 last time I checked. So that would be a pretty respectable bounce, even continuing from here in this upcoming week. And I think that is very possible as long as we do not get bad news or something that could spook the markets. China and Russia, those are going to be the two main keys besides the crypto markets, the Fed, and inflation, in my personal opinion. Those are going to be the things that could really clap the markets. You could see Finland to apply to join NATO, a historic move for the traditionally neutral country. This will double the amount of border that Russia has directly up to NATO, and they've talked about retaliating. Who knows? It's probably blank threats there. But if they were to attack Finland or Sweden or any other potential NATO partner, that's not going to be a good thing for the market. So I want to put that in there, as well as the China lockdowns. We did get some good news on Friday about those. Xi Jinping, he did say potentially here in the next couple of weeks we might see some easing of restrictions, and that would be a very, very bullish thing for the markets. Nonetheless, for SoFi stock, the key levels you want to watch is obviously $5 per share. That has been a key level of support. Anytime we have dipped under $5, it has been very, very brief, and then we have since bounced back up, now almost at $7 per share. Quite substantial bounce here. If we do get a negative week this week, $5, that's going to be the key level. But we are fast approaching $7.95 per share, the 50-day moving average, which was the prior level of resistance. A lot, like right here, you could call it in here and here. So that's going to be a key level. If we do break out above that, that's going to be a clear change of trend, and I think that could add a little bit more buying power than not heading into the future. So that is that. That's pretty much all I have for this video. That's all you guys need to know. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stocks down below in the description with Webull, Moomoo, and Public. Most importantly, thank you guys for watching, and I will see you in the next one.